Welcome back. In our Spotlight segment this week, we talk to the newly appointed chairman of the Colombo Stock Exchange, Krishan Balendra. At just 38, Krishan is the youngest to occupy the hot seat in the CSE's history. And he's president of corporate finance and group strategy at John Keells Holdings. Here are excerpts of an exclusive interview with Krishan Balendra, where he talks about his new role, which he recently described as both challenging and exciting. And also, is the market going to be bearish or bullish in these volatile times? Welcome to Benchmark, Krishan, and on behalf of the team, congratulations on your appointment as chairman of the CSE, the youngest at 38, I believe.
Yes, I'm told I'm the youngest. Yes.
Are we right in saying that this is a hot seat?
The stock exchange is essentially the trading platform for the market, and our obligation is to provide the most efficient platform for trading, and also to ensure that the brokers and the investors stick by the regulations and rules of the exchange. So I wouldn't really call it a hot seat, but it is an exciting position to be in at this exciting time for the country, and it comes with challenges.
Now, like you said, the job at hand is challenging and exciting. So what are the challenges that you foresee, and how exciting is it at this volatile time on the trading floor?
The Colombo Stock Exchange in the early 90s was seen as one of the most advanced in the region. I believe that we were the first exchange in South Asia to introduce fully automated scriptless trading. Since then, partly because volumes have been so lackluster, because of the conflict, the economy didn't progress, and volumes were low. So the exchange hasn't kept pace with some of the developments and advancements we've seen in other exchanges. But now, obviously, the environment has changed. Things are looking up. The private sector is growing fast and looking at new investments. We are seeing a number of new IPOs. So in this environment, we have to now develop the exchange further, enhance our technology, bring in certain investor protection measures which are on par with international standards. So it's an exciting time, but a challenging one as well.
Now, Krishan, in 2009, the market gained 125%, and in 2010, 100%. At this year, when you look at this year, things don't seem to be looking too good. It's looking pear-shaped, in fact. What do you think?
I wouldn't say that it's pear-shaped, having gained significantly for 2 years, over, as you said, over 100%. It's probably a healthy development that the market has taken a breather. We have seen a lot of activity. The volumes have continued to be high. We have seen participation across the board. We have seen a number of new listings. So, you can't expect the market to gain by 100% every year. It hasn't dived as such. It has plateaued. So, I wouldn't be too alarmed at how the market has performed year to date in 2011.
Now, you've also said that you've set your sights on making the market more dynamic and on par with international standards. So can you elaborate a little bit on this, and what changes are we going to see?
Some of the initiatives that we are looking at are connected with investor protection. Today, if there is a default on the Colombo Stock Exchange, there is no protection for the investor. In most exchanges in the world, you have a guaranteed settlement. So we are looking at two significant measures. Today on the Colombo Stock Exchange, if there is a trade, the shares change hands immediately, but payment is 3 days later. So the shares have changed ownership, but if payment is not made, obviously one investor loses out. So we are looking at introducing what is called delivery versus payment, where the exchange of the shares and payment happens almost simultaneously. Another measure we are looking at is a central counterparty, which is essentially a mechanism whereby you have the funds in place to guarantee settlement even if the buying party doesn't pay. In addition to that, some other technological advancements we are looking at to enhance the efficiency of trading. Some of the new technology we are looking at introducing is to enable the trading of derivatives in the market. So those are some of the significant measures we are looking at.
Well, one of the initiatives of the CSE for some time now has been to widen the investor public profile. But how would you react to critics that say that the Colombo Bourse is becoming something like a casino where a few high net worth individuals are running amok at the expense of the wider shareholder public, which at the end of the day is the profile that you want to entice to the market?
I wouldn't call the Colombo Bourse a casino. Certainly there has been in recent times a lot of speculation, perhaps excessive speculation at times. The regulator has acted fast and brought in certain curbs. We have seen the price band mechanism brought in, restrictions on broker credit, and certain other curbs to restrict speculation. But we continue to see long-term investment in the market as well. We see both foreign and local institutional investment, local high net worth and retail investors who take a long-term view are also in the market. So it's not correct to say that the market as a whole is a casino.
There are also allegations of market manipulations, Krishan, which at the end of the day again leaves the small-time investor in a quandary.
I think there could be market manipulations. Speculation, as I said, is ongoing, and it is common for most markets. It is up to both the Colombo Stock Exchange and the Securities and Exchange Commission to investigate and look into possible market manipulation and take appropriate action as necessary.
We take a quick commercial break now, and on the other side, Krishan Balendra expands on IPOs, foreign investments and private placements. Don't go away. Thanks for staying with us. You're watching the Big Picture Business Program, and we continue with more views and insights from Krishan Balendra. So how are you viewing the IPO frenzy? We've seen quite a few biggies in the past, and now we're seeing the apparel industry also getting in the fray. Well, it's accepted by all and sundry that this bodes well for the market, but the market somehow hasn't been able to sustain the premium listing prices of many of the IPOs. What's your take on this?
The IPOs, as you said, is a positive development for the capital markets. It's something the Colombo Stock Exchange would encourage. Our market is very limited in size, although it has grown significantly in the last 2 years. Volumes as well is still small compared to the regional, more developed bourses. So IPOs are positive. Some of the IPOs recently have not traded up like they have in the last 2 years. But again, that's in keeping in line with the performance of the market. The market went up 100% for 2 years. In that market conditions, the IPOs did extremely well. But today the market is not performing as strongly. So naturally you don't see IPOs on listing trading up as they did in 2009 and 10. So again, we are not too concerned about it, and overall we would encourage more companies to list, and this IPO frenzy, as you call it, we think is a positive development.
If this is par for the course, will this result in loss of interest among the investor public? I mean, look at Union Bank, look at Expo Lanka. How will this reflect on the mindset of those investors that are coming in?
I think investors should realize that every IPO is not going to appreciate significantly on listing. These recent IPOs have been trading only for a few weeks or few months. So investors should take a longer term view. They should study the fundamentals of the company and take a long term view, and should not be too concerned about short term volatility.
How do you view the trend, Krishan? Actually, it's a growing trend of corporates seeking private placements as opposed to going public. Is this more often than not a precursor to a market debut?
The decision to do a private placement for a unlisted company is entirely up to the company and its board and shareholders. Companies do private placements for a number of reasons. It could be to bring in a strategic investor who can add value to their business. It could be to raise some capital prior to an IPO in order to restructure the business so that the company is more attractive to investors at the time of the IPO. And if it is to make the company more attractive prior to an IPO, that is a positive.
So does this trend affect the new equities prospects going forward?
It could affect in that if they choose to do private placements instead of IPOs, that would limit the number of companies that would list on the Colombo Bourse. But at the same time, usually when companies do private placements, there is a plan within a certain time frame to list on the Colombo Stock Exchange in order to enable investors to trade and exit if they so wish.
We now have something like 250 odd listed companies on the board, so to speak, with more biggies in the IPO pipeline. Where do you see these numbers heading in, say, the next 12 months?
It's likely that we will see more IPOs. I can't give you a number as such or a value. If that would depend on market conditions. But as I said earlier, we have to keep in mind that our market is still quite small. If you look at our total market cap, it amounts to only about 40% of GDP. In other economies or other countries in the region, the market caps amount to over 200% of GDP. If you look at our trading volume, in 2010, which was a very strong year for the Colombo market, trading volume during the year amounted to about 30% of the total market cap. And that is one of the smallest in the region and one of the lowest in the region. So there is a long way to go.
We would all like to see more foreign investors in the market. Now, what more must we do to keep these foreign investors in for the longer term rather than just come in, play and go?
We have a lot of long-term institutional foreign funds, the typical emerging markets foreign funds like Aberdeen, First State, Genesis and so on investing in this market. And even before this current upturn, prior to this current upturn, they have been investing in the Colombo market and have been long-term investors. And the foreign participation in this market is predominantly institutional, not short-term retail. Having said that, we need to take more measures to attract more foreign participation. We need to increase the liquidity, which would come with more IPOs, listing of more large companies with big free floats. In addition to that, we need to take some of these investor protection initiatives, such as the guaranteed settlement, delivery versus payment, and also enhance our technology so that it is on par with the international standards. So there is more that we need to do to attract more foreign funds. But at the same time, we have a lot of the established emerging markets funds participating in the Colombo market.
And that concludes our interview with Krishan Balendra. It's time now for another commercial break. And when we return, we talk to the Managing Director of the Nielsen Company about inflation and other burning issues for businesses today. So stay with us.